Hello, everybody. Yeah, just checking if it works. It works. So thank you very much for the introduction. Thank you very much for organizers for organizing this. Thank you very much for previous speakers. As Darius mentioned, yeah, there's going to be some mutual points in here, and I will add on top of his presentation. So I will talk today a little bit about fintechs versus banks from a perspective of a fintech, and essentially like what challenges we see as fintechs and what opportunities we see as compared to banks. So this is the agenda for today. It's actually quite simple. So the first part is what spurred the growth of payment fintechs. This is with a focus on electronic money institutions. The second part is the obstacles payment fintechs can't yet overcome, and this is the part where actually banks show their superiority and we're very much better than us. And the third part is, what's waiting next for us. So as you all know, the number of payment fintechs has grown really fast, and as you can see in the charts of the number of EMIs and payment institutions that are using Centralink essentially went from almost 0 to 100 plus in just a few years. And this was influenced by several factors. Like there was a lot of attention from the Bank of Lithuania, from the Ministry of Finance, and they provided access for EMIs to use the Centralink system. Also, they invited businesses by making getting a license quite a short time to get. And also, they promoted Lithuania as a fintech hub by showing, that we have a low tax rate, we have a good ease of doing business, and so on, and a good workforce. So the result is that not just in Lithuania, but also in other countries in Europe, the number of EMIs and payment institutions is really high right now. And not just the number, but also the transactions. We're starting to become, we're starting moving a little bit from just startups to actual market participants. And as you can see that the value of transactions by EMIs and PIs last year was almost 45 billion euros in Lithuania. And as EFMA stated, they're saying that fintechs actually are moving like from the startup position to becoming mature market players and heading towards profitability. So, as Darius mentioned that, very few people actually change their payment providers. So I will look into why individuals go for fintechs. So why do they change their current provider, a payment account provider, for a fintech solution? And as you can see in the quote, that this relationship of staying with your payment account provider is really stable. Like on average, people stay with their accounts for 17 years. This is longer than, on average, people stay with their partners. So this relationship is really strong, but it took something, to break it. And EY did a study in 2019. They took the main reasons why people change their payment account providers. And the number one reason was not, the sexy look of the app. It was fees or rates. And there is one guy in the UK that did an experiment. He tried opening an account in 12 incumbent banks and also challenger banks. And also he tried to make a transfer, international transfer from the UK to the US, and to see what the fees are for the user. And as you can see in the top, it's mostly challenger banks, and down below it's mostly incumbent, traditional banks. The reasons may be numerous, probably that the challenger banks were using some solutions like local payments, currency cloud, or TransferWise, and the incumbent banks were using more traditional ways such as SWIFT payments. The second reason is that it's simple and easy to open a payment account with a challenger bank, with an EMI institution. So he also measured that it took just 2 days from the actual registration to using the card, to using his account in a shop. And yeah, the situation is also quite similar. The process is longer with incumbent banks. Some of the reasons included 18% of respondents said that they use it for different products, such as using your app to invest, using your app to budget, using your app to save some money in the vault. 12% stressed a better experience. So essentially, yeah, it's the sexiness factor that the app looks nice. It takes less clicks to make a payment and to do other operations. And other reasons as well, such as, some people want personalized products, some people just want to try a new thing, and also remote opening procedures. In my perspective, a more interesting question is why business users go for opening an account with an EMI or with a challenger bank. Because we hear, yeah, like Darius mentioned, we hear a lot of buzz about FinTechs, but it's usually like related to individual accounts. The first reason that I think encouraged this was solely online onboarding. So when you open the account with a Lithuanian EMI, for example, everything is done remotely. You don't have to go to a physical bank branch, the KYC, the compliance procedures. Everything is done solely remotely, and that allows onboarding clients not just locally, but also from other areas in Europe and as well globally. The second reason is that challenger banks and EMIs, they have slightly different target. And as Jekaterina and as Darius mentioned, like after banks started de-risking, there was a lot of opportunities for FinTechs to grab some of their clients, mostly their high-risk clients, and also to grab some of their digital clients that don't have physical presence. So that could be, P2P payment platforms, other FinTechs, iGaming companies, crypto companies. Also, FinTechs, they usually have a very close relationship with their clients, because larger banks, they're not going to bother with creating a custom solution, creating a white label platform or something like that. Whereas we, as smaller market participants, if we see a business case, if we see it as a place of growth, we're always willing to talk to the client, provide them a white label payment solution or any other custom solution that they may require. Another reason why businesses start choosing payment accounts with EMIs, I think, has a lot to do with the sales structure. Since we don't have such many people and we don't have a history of working in the local and international markets, we often work with partners. So that could be corporate service providers, that could be company formation agents, lawyers, and especially those that are located in hubs where our target customers are located. So Estonia, Malta, and so on. And the obvious reason is that there's a lot of active marketing when it comes to payment FinTechs for opening business accounts. I tried Googling just a simple query, open business account. So the first 4 and the only ads were encouraging you to open an account with a new market player. Now, these are the slides where I'm trying to see like where banks are stronger than us, and most of these obstacles were actually quite significant. So the first obvious obstacle is that the product portfolio of banks is just much larger. They have everything from financing to deposits, from investment products, mortgages, insurance, everything. Whereas if you take an ordinary EMI, that's mostly going to be just current accounts, payments. Some of them offer cards, but usually, it stops here. And if you take even the largest challenger banks, none of them have a full range that could support, a client that needs everything. Another very important reason is credit capabilities of banks. Banks are, of course, they have large loan portfolios, and they have very attractive lending rates, of course, because for themselves to finance their loans is much cheaper. So this is the lending rate that I found in the Bank of Lithuania's website, and essentially it's around 3% of an interest rate of bank loans to non-financial corporations company issues. And 3% is really low. It's the interest rate that the company, the end client gets. Whereas if you take any fintech financing solutions, those rates are much higher. SME finance, when they were issuing bonds, they were issuing bonds with an 8% rate. So that means for themselves to finance their loans, it was much more expensive than for end bank client to get a loan. Also, we can't address at all large or clients that have physical presence because they need financing, they need credit lines, they need leasing, they need ordinary bank loans, and as you have seen, we're not attractive in there. Then they need cash, and this is of course where banks have a strong advantage, and they need a range of products. Another important reason is trust. Banks have been here for a long time, for hundreds of years, and EMIs have been here, just for a short time. And when you mention it to a client, EMI, first of all, you have to explain what it is, and second of all, you have to, say that it's an actual company. It's licensed by the Bank of Lithuania, and banks, they have all the trust mechanisms. They have a European deposit insurance scheme. Keeping money with EMIs, we're also required to safeguard all the funds by the Bank of Lithuania, either safeguard or insure them, but still building trust is quite complicated. And also client acquisition. As I've shown in one of the first slides, that there is a big number of EMIs and PIs in Europe, and they're all essentially doing a very similar thing. So getting a client is tricky. As you can see in the picture, there are currently around 400 EMIs in Europe, and so it's essentially almost a commodity product, providing payment accounts, and getting clients is really tricky. Yeah, finally, that banks are established, so they have good infrastructure in place. Everything, like from the payment systems, from the correspondent banks. They have long history. So I checked that one bank in Lithuania, this year they're celebrating 200 years since the establishment, whereas FinTechs were, very fresh, celebrating 2 years or 3 years. And banks have a strong network of partners and customers. And switching for a customer, if you have a strong relationship with a customer, is quite tricky. Unless there is a big obstacle to overcome, it's difficult to switch. Okay, and I come to the final slide. So where do we go from here? So FinTechs were actually becoming actual market participants with significant payment volumes, but they need to find and know their niche because there are so many EMIs, and if we can't find and target the right customer, a paying customer, we will not stay long in the business. We need to increase the product range and work on attracting target customers. Gaining trust is very important, and that can be done either by good past experience from other companies, or as some examples have shown, obtaining a banking license. And I think that a larger client movement will be between individual clients, because for them it's very easy to switch. You just open an account, download a new app, onboard by showing your face. It's very easy. And for corporate clients, I don't think actually there's going to be a lot of change. I think that large clients will stay with incumbent banks, and FinTechs will attract a different kind of customer. It's going to be an international and digital company with some SMEs being attracted. So basically, we're going to share the clientele. That's it. This is the end of the presentation, and we're going to meet during the panel.